Fantastic. All right, guys. Again, happy Friday. My name is Dr. Greg. We're going to dive in to the dollar index and some other things and some of your picks. If you got something you want me to look at, go ahead and put it in the chat box and let me know, and we'll go ahead and look at that. Look at what you're looking at, what you want to look at today. Okay, as we wind down this week. Now, we're going to start with the dollar index. And somebody had asked a question about the big drop. You always look at Friday moves. You kind of discount Friday moves. We call it Freaky Friday, where it's manic Monday, turnaround Tuesday, wow Wednesday, fabulous Thursday, right? And then Friday is freaky, kind of like because everyone goes home, right? They get the 3-day weekend, so things kind of like we get pullbacks. But there's no doubt that we have a very strong bullish trend on the dollar index, and but nothing moves in a straight line. I'm using Heikin-Ashi candles, and Heikin-Ashi candles just really streamline my analysis. I'm really a visual person. Green is up, red is down, so it's very clear that this is an uptrend. I don't have to you don't have to be a brain surgeon or a PhD to figure that one out, right? However, if you drop down to smaller time frames, you can see that within this uptrend, we have some pullbacks, and these pullbacks are profit-taking opportunities in the market, right? And that's what the dollar controls. The DXY controls the major currency pairs, right? So if you learn how to trade the dollar, you know how to trade everything else, right? And then we can look at the euro, which is the anti-dollar, right? So we get a high of about the 110.21 that we had on the 13th, and it's in the back of higher interest rates. We had a CPI report that was warmer than expected, and the chances of further rate cuts seem to have decreased. Instead of having 2 or 3 rate cuts, we're looking for possibly maybe 1 rate cut or no rate cuts. And there's even talk that there might be a rate hike because of the strong, robust jobs market. The jobs market, the NFP number came out stronger than expected, and we also had the inflation, a stubborn kind of sticky inflation. So with that, interest rates are the biggest drivers of currency rates. And so we could possibly see 6% on the 10-year Treasury, and that could be the spell doom and gloom for the market. Market does not like expensive money. Borrowing costs go up, that usually hurts the market. Okay, so we can see this. We have a nice uptrend with a pullback here on the daily chart. Go down to a 4-hour chart. We can see even more of a pullback, but stabilization along this trend line that's been going on for, well, God knows how long, since the pandemic lows, right? So what does that mean for the other currency pairs? And in the past, usually a rising dollar would hurt the equity market, but the equity market is quite strong. So what we got here, we can look at you flip this upside down and you look at the euro as the anti-dollar, right? And so we can go to the euro, and we can see that every time we've pulled back in the dollar, we've seen rises. So we have in a trend. We're taking a break. We got a nice little pullback against the trend. Breathe in, breathe out, breathe in, breathe out. So the price goes up and pulls back. We've got wonderful opportunities for probably on Tuesday for another rally in the dollar. My favorite pair to trade this is a dollar CAD. But let's flip this around and look at the euro dollar, which is the anti-dollar.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
And we can see just the opposite. And it makes it very clear. Now, the US dollar is the big dog and it's the reserve currency of the world. And we can see that as interest rates go up, we have a strong economy. There's lots of excitement about the new administration coming in. And so other currencies are taking a backseat. They might get little rallies along the way. Nothing goes down in a straight line, but we're going to see this group of currency pairs moving together at the same time. I see someone that just put in NZD, USD, and that's one of the pairs I love to trade too. But if we can see, starting back, walking it back from a weekly chart, I mean, this is just blood red, just falling off the cliff after peaking out about the 1219 area. We broke the 200 simple moving average, and we've just been breaking support levels after support level. And now we're probably aiming toward the 2022 lows or 2023 lows here, right? So that looks like our target, right? And so look at this chart. Well, look at this chart. Look at the euro. I'm going to go through these others, and they're going to look pretty much the same. Why? Because it's EUR, USD, the base currency, and we can see that the similar pattern in the Aussie dollar, except notice how Aussie is a little bit more advanced. It's already reached the low already, and I look at the Aussie dollar and Kiwi dollar are like time travelers. They seem to be ahead of the game, ahead of the pound dollar and the other currency pairs. I don't know if it's just that part of the world because they start their day earlier, or they're ahead of us. But you notice that we're already at the low. But if we went back to the euro, we haven't reached that yet. So the Aussie is almost telling us what's going to happen with the going forward, right? That we could see that eventually we might see the euro come back and test this low of 95.21, which was the October low, right? So in a downtrend, we like to sell strength. When rallies, we want to sell premium. So every time we see a rally up against the trend, we want to look for possible shorts in that, right? Every time we've rallied up, sell, rally up, sell, rally up, right? It's like serving like those volleyball guys. They spike the ball up and they slam dunk it. So we want to sell rallies in a downtrend, right? And here's that Kiwi dollar, and then someone's asking about dollar Swiss, which is just the opposite. It's gonna be cool, right? So I'm going to remove all these drawings here. Start back to that weekly chart, walk our way down. And Kiwi dollar is already down there and retesting. This is interesting because we've got these lows here, and I'm going to use this. Right, we're touching this area. We've touched it once on the Kiwi dollar, October 10th, well, a couple of days before my birthday, October 10th, 2022, and then we had this pandemic low, March 16th, 2020. The infamous COVID low, right? And we hit this. Every time we've hit this area, we have jumped very strongly, right? But you notice that every time we've touched this demand zone, that we have made lower highs, right? So this is a pattern that we call a descending triangle, right? And so a lot of people might get stuck on this and go, oh, triple bottom, might get a breakout, but we could get a massive breakout to the south side if we clear this call it 5461, that 5460 area or so. And then there's nothing, we have to go back a long way. We have to go back to 2009. So that's like that goes back to the financial crisis almost, financial crisis lows that we had. That takes us back to 48.78. So that's a massive a massive move there. So we've got this and this big giant topping pattern here. It looks like a giant head and shoulders, big topping pattern. It doesn't. Every time it's rallied, it has not been able to. It's like one of those arm wrestlers, you gotta pull it down, you just can't get it up, So there you go. Hey, I see Kiddes. He says, hi, Doc. Kiddes, BTC, and AUD. All right, you guys give me a lot to talk about. Awesome. Okay. And okay. So this is Kiwi. Now Kiwi's right across the the straits, the Straits of Tasmania, is that's called. Somebody correct me if I'm wrong, but here is Aussie dollar. Similar, starting from that weekly chart, you can see that it's just a giant topping pattern, and we have we have retested the lows of 2022. Almost at that triple bottom kind of pattern, but we're sitting at a decision point. These are the lows of 2008. And again, it's a very strong downtrend, a very strong downtrend. You've had, even though the U.S. is cutting, which is, kind of abnormal that we have the U.S. rates are the Fed is cutting the rates. However, the bond market doesn't care about what the central bank says, right? Central bank says, oh yeah, we're going to cut interest rates 25 basis points. But why is the TNX? Why do the bond traders say, nah, the rates are going to go up. Rates are going up. Long-term yields are higher, right? You have this kind of inverted yield curve. It's almost like they're running for cover in case of some giant catastrophe. And in the past, we've never really seen pairs like these used to be your risk on currencies, guys, right? You know what risk on currencies? Stock market goes up, Aussie goes up, Kiwi goes up, Euro goes up, pound goes up when we have a strong stock market, right? We have our stock market is holding on to the highs, but there's we've seen this correlation has broken down. So this could be the canary in the coal mine that's telling us that there could be some larger correction in the equity markets around the world, because these guys are diving. The yen pairs are diving too. And so we're seeing, this could be a warning that, all the fluff in the stock market is about to have some kind of a crash. So we'll take a look at some index charts, but we can see that this is the Aussie on the weekly chart. We're at a key level, and I'm sure a lot of people are going to look at this and say, look, we buy support, we're at support, but every time we've rallied, you're making lower highs, and this is bearish, right? So we may get some type of an initial rally from this 0.6184 area, which was a low of October 17, 2022. We can see some type of maybe a rally, a reaction, but this overhead, there's so much overhead supply. I mean, you can see the overhead supply there's tons of supply, whereas people are just they are not wanting to take this higher. So we've got lots of overhead. Every time the thing has gone up into this area, it's just dropped. So there's a supply, and then we just broke some other supply areas here, right? So we just we've broken that as well, and so we break this there's nothing here until way down to we break the 61.84 area. Our next stop is like 55.02. There's like an air gap. Like air gap, you're like, you're like riding an airplane, you're on a 747, you're just flying, everything's great. All of a sudden, boom, your head almost hits the ceiling because, the plane's hitting the air pocket, right? And just drops, 10,000 feet. And so that's what we could possibly see if we don't hold this area, it to be very juicy for the bears. Bulls versus bears. I'm a cautious bear because we could get a bounce. Um, you know, I wouldn't want to be a hero and jump in front of this yet without some type of confirmation. I would love to. I love selling rallies. I love selling rallies. I like to see a rally up from this area, and any type of weakness, then look for a move back down to this 5502 area. That would be pretty cool. And if we break back above this area, then it's like, okay, well, maybe something else has happened. But we're below the 200, below the trend line on the Aussie dollar, and we're bouncing off this area. And these pairs, these risk assets, are going down when the stock market is going up, which is like a warning sign that somebody's lying here. Which is it risk on? Well, if it's risk on, why aren't the currencies following? Okay, so this could be something. Okay, so let's like dollar Swiss. Dollar Swiss, interesting, and we have. I want to start for weekly. Let's go to the monthly. I like going out to the monthly, right? Monthly is very interesting. We really haven't gone anywhere. Really, you got to figure, in 12 years, 13 years, and as long as I've been in the business, I joined the Forex capital markets. I was a currency analyst for Forex capital markets in 2006. So 2006, the markets were like super accelerating, right? And then going into the financial crisis, and we really haven't gone anywhere. These are like the same prices I saw when I was on the desk. We haven't really gone anywhere, right? We're in a huge band between 101.30, 1 spot 0353 and 0 spot 755. And when we had the Swiss National Bank fiasco, right there, just a week now, right, in the past, when the Swiss National Bank broke the peg to the Swiss franc to the euro, and we saw like thousands of pips move in just a matter of hours, which was, but ever since then, we really haven't seen much there, right? We've been just trapped in a range, new ranges like 83.24 to 91.30. We're at the top of the range, below the 200 simple moving average. Even though this is a dollar pair, we have not really gone anywhere. If you draw a trend line from the low, you have higher lows, right? But on the other hand, you have lower highs. You have a triangle, right? And triangles typically mean indecision, where we really haven't made a decision. And top of the market, you can play the range and try to look for a short back down. But we could get a breakout. A breakout would happen. We closed above 0 spot 9216, and we would have maybe the 200 simple move average coming in as resistance at 0 spot 9585, right? But we got that's we break that when we're back into this range, and the range would be 0 spot 9230 to the top is 1 spot 035, so about an 800 or 790 pip range, almost 800 pip range, right? So we're tagging that. Do we have enough juice to break out and to move up? That's the big question there, right? And we're far off the low. So, but every time we've reached this area, there is going on there. Let's see if we come on. It's spinning. The wheels are spinning. Okay, there we go. So we're hitting the 200 simple moving average on the weekly chart, and nice strong uptrend. Like even within ranges, there are trends within ranges, and so they are tradable, right? But we are in this resistance area here. Downward trend line, 200 simple moving average. Previous, actually, we can. There's support and resistance coming in. We got all this area back here. and then we have the highs that we've reached into. So we're in this kind of like band, and I think a short would be nice if we could get some structure change. Lower high, lower swing high, lower swing low on the lower time frame, right? You can see that we are getting a pullback where we haven't really broken. I can see a break of 0.896, 89996, right, on a daily chart. That would give us a lower high, a lower low, and that would have a structure change, and that would be a safer place. But there's tight, maybe not a tight stop, but maybe a little bit of a room to breathe for this to roll over and come back down. We've got this range, that's been going on for a while. If we break above that, then good night. We've got lots of space to go, right? There's lots of room to. So if we get a breakout, which is possible, anything's possible. Remember, these markets, they're kind of temperamental, right? We could see a break back up into this upper range on the daily chart, right? But right now we've hit this, knock 3 times on the ceiling if you want me, right? Like twice on the pipe. If the answer is no, that's Tony Orlando and Don, 1974 for all of you out there. And there you go. Boom, boom, boom. And then we can see possible south side break.
So I hope you did see or you did check US economic events. They're all negative. So means inflation is not as bad as maybe we thought. So I think you did see a CPI. There were also PPI, also retail sales. All of them, they were lower, or they missed the estimate, or they were actually showing some slowdown. Here it's a retail sale. So that is actually good for our stock market, but I was expecting to see some very bigger move on NASDAQ and other ones, but it seems like the market did not really care much. We can see the moves were not really that great. On NASDAQ currently, I can say we are on a smaller downtrend move here. If we go on a bigger time frame, we are still on that nice bigger or uptrend, but at the moment this is on a 4-hour time frame. We can see that the market, it seems to be going lower, so which means we will be expecting to look for those sells. But once the market breaks out of this resistant area, obviously we will be expecting to see the market going higher, you see. So yeah, so NASDAQ 100 oil, okay. Yeah, I will be checking all of that, guys. So I'll be checking all of that. Plus, when we talk about fundamentals, guys, next week and Monday, I think Trump is going to be officially the president or US president, and that might come with a lot of effects, especially on the market. But currently, what we see is on the stock market, it seems to be going to be positive. So just look for a very long bullish momentum going further. But at the moment, we can just go straight to other pairs. I see CAD JPY, Euro USD. So let me start with CAD JPY, and then I will be following other ones. I think I don't really have CAD JPY here, so let me add that. So CAD JPY, let me just write that. So the reason I don't really have this pairs, guys, or added, it's because I only focus on very, very, very few pairs, and mostly it's going to be NASDAQ and gold. So which means I don't really need to just analyze everything, but yes, with the analysis for this. So for our chart, the market is actually showing me that it's actually going to the upside, which means we are on a very nice uptrend structure. So we can see that the market is moving like that. So we expect the market to continue going even higher. So we are on a very nice uptrend structure. So I think this is quite straightforward. So once you see something like that, it's when you can start drawing with proper structures and see if maybe that makes sense, so that you are on the right side, guys. I don't know if maybe my connection is a bit slow or something, but I think it's this platform because it's actually web based, so it's not really as strong as how it's supposed to be actually, but at least you can get whatever nice uptrend structure, a very nice uptrend structure. Maybe just to make this candlestick a little bit thicker, I will try to go on a daily time frame so that you can see a nice and clean structure. So it's just the same as 4 hours time frame, but you can see that on a daily time frame, at least you can see or get thicker candlesticks. So on top there, I don't usually like to draw anything on top there, especially when we are on this nice uptrend. So I'm expecting to see the market going higher like that as we are on this nice uptrend. For those maybe who wanted to buy here, I think around this level, as long as it was still above our support area, I think something like that was going to work very nice. I think the market is now moving away from very good time to look for that buy position. I think the market can still go even higher. I'm not saying go there and buy, but I think you can actually make your own decisions. You can see here, this is a proper structure that we can actually rely on. I think on this, we are actually clear that we are on a very nice uptrend. So which means I'm expecting to look for a continuation of that buy. Canada is quite stronger at the moment against JPY. You as that the market actually broke out of that, and yeah, this is actually how it is. You can see that this is our proper resistance structure, and even here, but the market already broke out. So which means at the moment it seems like oil is going to be recovering here, but we know that Trump is going to be the president next week, and we know very well that he wants to pump more oil. But I think there were other sanctions about Russian oil that might also make these prices to go even higher. But it means we have to catch up with the news. If maybe you follow OPEC countries about US oils and maybe other oil, but this is the main one. Obviously, it seems like for now, if they are going to continue with putting pressure on Russia and maybe placing those, putting those sanctions in place, that I think is going to push oil way too higher. Do you see that? I hope maybe you understand that. So to me, I think once we got out of this this downtrend structure, I think that we have enough room to even go even higher. But I think we will have to wait and see. But at the moment, yes, this is what we have. We can start to continue looking for those bullish structures. But at the moment, just take care and go slower there. You can mark this area as a resistance, and if maybe the market breaks out of that, you can say, yeah, maybe it's a good time for me to look for that buy. Or maybe the market might bounce, might go a little bit lower here, maybe just to retest before going higher. So there is that possibility. But the overall structure at the moment, as long as the market is moving above this resistance, it means that we are still on that an uptrend structure, as we are no longer on that downtrend structure. So that can be a very longer structure going further, and it might take way too long. If maybe we can talk about the structure starting from this area, let's say from this downtrend, since April last year, April until this year, US oil, it was on this downtrend. So you can easily see that this trend can actually last very long. So if maybe the trend start to go higher there, yes, we can expect that to take 12 months, 6 months, it depends. So when we talk about trends, just know that, yeah, most likely they will take a quite long. So even here, when we say it might be on a long-term uptrend, I think that if you get around this level, that will be a very good thing for anyone who is actually buying oil. So let me check another pair. I hope maybe that helped. So what do you think about BOJ, Bank of Japan rate? I don't really think much about it. I don't really follow it that much, but the thing is, when they release their interest rates, mostly you can't get that easy. They don't really specify which time. Yes, you can see the event date, but they won't say anything much. But what I know is their interest rates were quite lower. So I think they will be trying to increase so that they can make a Japan currency to be a little bit stronger. But at the moment, I don't really know much about their interest rates, about their inflations and stuff like that. But if maybe inflation is going down, yeah, I think maybe that will be good. But at the moment, what I know is they were busy trying to increase their rates, because their rates or their interest rates, they were quite lower. So yeah, but I'll have to go and do my research on that.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.